Welcome to this session of ICAI Academy tutorial on batch costing. In this lecture, I will examine the meaning of batch costing. I will give the step-by-step approach for solving batch costing. And I will also solve ATS 3 cost accounting March 2025 as work the example. Let's go into it. Batch costing arises where a customer orders a quantity of identical products at the same time. Batch costing arises where a customer orders a quantity of identical products at the same time. A batch is a group of similar items or a similar product which maintains its identity during one or more stages of production and is treated as a cost unit. A group of similar products which maintains its identity during one or more stages of production and is treated as a cost unit. Most of the exams questions on batch costing will ask you to determine the cost per unit of a batch. To determine the cost per unit, cost per unit will be equals to total batch cost, total batch cost divided by number of units in the batch. Number of units in the batch. Total batch cost divided by number of units in the batch. So, batch costing is similar to job costing. Both job costing and batch costing are forms of specific order costing, in which job is undertaken to customer special requirements and in which each order is of short duration. Just like job costing, if you have watched my earlier video on job costing, it's of short duration. Batch costing is also of short duration. So the major thing you want to do here, you may be asked to ascertain the profit or loss on the batch. To calculate the profit or loss on the batch, you have the job cost. You may start with job cost or batch cost. Batch cost, which may include direct materials, direct labor, direct expenses, and this will give you the prime cost. Your direct expenses are variable overheads. Variable overheads. Then your prime cost, then you now have overheads absorbed. Overheads absorbed. You absorb overheads to the product. Then you get total cost of the batch. After you have ascertained the total cost of the batch, you can now mark up. You add it up, you mark up the batch cost in order to get the total selling price. Or where the selling price is given. So, and the cost information is given, that means you want to get the profit on the batch. So in that case, you start with sales revenue, or let me say total sales revenue. Where this number of units in the batch is given and the selling price is given, you multiply the selling price by the units in the batch. You may start with that, now less all the cost of the batch, then you get the batch profit or loss. This markup is the profit. But where it is not given, where the profit is not given, then you calculate the total cost, you may be given a percentage markup. You now mark it up in order to get the total sales revenue. So I want to know that markup is the profit over cost price times 100. Profit expressed as a fraction or percentage of the cost price, that is markup. Profit over cost price times 100 will give you the markup. But for margin, that is profit over sales revenue times 100. Where margin is given, it means profit markup is a profit expressed on cost price. Markup is always calculated on the cost price, while margin is always calculated on sales revenue. It means if percentage margin is given, just apply the percentage margin on the sales revenue in order to get the profit. But where the profit is not, where the sales revenue is not given, that means there is no, and you are given percentage margin, there is no way you can apply margin directly on the revenue. In that case, you will need to convert your margin to markup. Since if sales revenue is not given, the cost information will be provided in the question. Where sales revenue is not given, the cost information will be given. In that case, you will have to convert your margin to markup before you can calculate the profit. Then that profit now you now add it to the cost in order to get the sales revenue. So what I'm trying to say is, if margin is 20%, remember margin is supposed to be calculated on sales revenue, and you have known the cost, you are given the cost information, cost. If your cost, the total cost, after you've aggregated all your costs, maybe that is given to be $100,000. Normally, to get your profit will have been 20% of sales revenue, but your sales revenue is not given. So in that case, there is no way you can calculate 20% of sales revenue since sales revenue is not given. And to apply 20% on cost, it is equally wrong, because there is no sameness. There is a disparity. There is a margin. There is a wide gap. There is a gap between the cost and the margin. Margin is not related with the cost. So in that case, you know it is the markup that is related with the cost. In that case, you will need to convert your margin to markup so that you can, it is the markup that relates to the cost. So in order to be able to apply your markup on your cost, on your cost. So margin 20%, cost 100%. So to convert the relationship between markup and margin, margin now is 20 over 100, 20%. So markup now, mark up will be 20 over 100 minus 20. When you are converting from margin to markup, you subtract the numerator from the denominator. So that means our markup now will be 20 over 100 minus 20, that is 80. If you want to take this to percentage now, what percentage would that be? 20 divided by 80 times 100. That gives us 25%. 25%. That means percentage markup is 25%, where margin is 20%. Now that you've gotten the markup now, you can calculate the profit. And what is your profit? Profit will now be what? 25% of the cost price. And the cost is given to be $100,000. That means we have the profit of $25,000. We have the profit of $25,000. So that is the profit. Now that you've known your profit, now you can calculate the sales revenue. Sales will be what? Sales, remember, will be cost plus profit. Cost plus profit equal to sales. Now that you have gotten the cost is given to be 100,000, and profit has been arrived at, and we got 25,000. 100,000 plus 25,000 That will be what? 125,000. It means the sales value of the product is 125,000. If you have used 20% of 100,000, 20% of 100,000, that would have given you 20,000. And if you add the 20,000 to 100,000, then you'll be getting 120,000, which is not correct. The correct sales values ought to have been 125,000. So if you are given markup, you will have been able to calculate the markup directly on the cost. But if you are given margin, you will have been able to calculate the margin directly on the sales value. But what if the sales value is not given? That means you cannot apply that margin on the sales value since you don't know your sales value. Then you have to convert from margin to the markup. Then you now apply that markup on the cost. But where the sales value is given and you are given a margin, then in that case, you will need to convert from the, if you are given the sales value and you are given the margin, then you can apply the margin directly on the sales value. In this case, now that you have known the sales value now to be, our sales value is 125,000. If sales value is 125,000, remember our margin which was provided in the question is 20%. Therefore, profit will be what? 20% of the sales value. That can only be done where the sales value is low. 20% of 125,000, which is our sales value. 20% of 125,000. That gives us $25,000. You see that now that you have obtained the sales value, then you were able to apply the margin directly on the sales value to get the profit, and which was the same as the amount obtained as profit when we converted from margin to markup. When we calculated 25% of 100,000, we got 25,000. Now that you have gotten the sales value to be 125,000, now we calculated the 20%, which is the margin on the sales value. We equally got the same value, the same answer as 25,000. That is the relationship between the markup and margin, because the only problem area with the batch costing is to know the correct percentage to use. I've told you margin goes with sales, markup goes with the cost. Please bear that in mind. Margin for sales, markup with the cost. Bear that in mind. Where markup is given and you are not given the cost, and you are given the sales value, they are not the same. Markup for cost and you are given sales value. In that case, you have to convert your markup to margin. And when you are converting from markup to margin, you add the numerator to denominator. Markup to margin, add the numerator to the denominator. But the example, the illustration I have made, this is from margin to markup. From margin to markup, you subtract the numerator from the denominator. Please bear that in mind. ATS 3, March 2025, cost accounting question number 3. Lanlehin Limited undertakes to supply 1,000 units of a component per month for the month of January, February, and March 2023. Every month, a batch order is opened against which materials and labor costs are booked at actuals. Overheads are at a rate per labor hour. The selling price is 150 Liberian dollar per unit. The analysis of the cost is as follows. Batch output number, material cost in Liberian dollar, labor cost in Liberian dollar. January, 125 units, 125 batch output, 62,500 Liberian dollar and 25,000 Liberian dollar for materials and labor. In February, we have 1,500, 90,000 Liberian dollar and 30,000 Liberian dollar for materials and labor. In March, we have 1,000 batch output, 50,000 Liberian dollar and 20,000 Liberian dollar. Labor is paid at the rate of 20 Liberian dollar per hour. The other details are, we have months of January, February, March. Then overheads in Liberian dollar, 120,000, 90,000, and 150,000. Total labor hours, 4,000, 4,500, and 5,000. You are required to A, present the cost and profit per unit of each batch order. B, determine the overall position of the order of 3,000 units. In the A part of the question, you are to present the cost and profit per unit of each batch order. Now, solution. The name of the entity is Lanlehin Limited. Lanlehin Limited. Presentation of costs and profit per unit of each batch order. So 3 months are involved. We have the month of January, February, and March. We have February. Then we have January. And the amount is in Liberian dollar. But before that, you are given the units order. In the month of January, the batch output is 1,250, 1,500, and 1,000. Batch output. In the month of January, we have 1,250. In February, 1,500. And in March, we have 1,000. The selling price is given in the question. And you are given the selling price to be 150 Liberian dollar. The selling price is 150 Liberian dollar per unit. So if the selling price is 150 Liberian dollar, so we have selling price 150 Liberian dollar. So if you multiply the selling price by the batch output, then you get the total revenue. And all amounts or all figures are in Liberian dollar. If you multiply the batch output by the selling price, you will get the revenue or sales revenue. Revenue, that would be 1,250 times 150. That gives us 187,500 Liberian dollar. In the month of February, we have 1,500 times 150. That gives us 225,000 Liberian dollar. In the month of March, we have 1,000 times 150. That will be 150,000 Liberian dollar. From the revenue, you deduct the cost. Some of the costs are directly attributed to each of the products. They are direct. So the direct costs include materials and labor. In the month of January, material is 62,500, February 90,000, March 50,000. So we want to record that in the month of January we have materials. In the month of January is given to be 62,500. In the month of February we have 90,000 as the cost of the materials, and that of in the month of March we have 50,000. These are the cost of materials given in the question. After the materials, you have labor. The cost of labor in the month of January, we have 25,000. In February, we have 30,000. And in March, we have 20,000. The profit is revenue less cost. That is why we are subtracting the cost from revenue in order to get the profit. So now, if you look at the question, You were told labor is paid at the rate of 20 Liberian dollar per hour. So that is to show that all these labor costs, the rate is 20 Liberian dollar per hour. How many labor hours were worked in the month of January, and the actual hour for February and March, the actual hour? You will need to determine that. But these hours were given for overheads. The essence is to calculate the overhead absorption rate. Remember, overhead absorption rate is budgeted overheads over budgeted level of activities. So that means the level of activity is labor hours. Therefore, overhead absorption rate will be budgeted overheads over budgeted labor hours. Now, if you use this to determine the overhead absorption rate, then you will now absorb that overhead absorption rate based on the actual labor hours. And to get the actual labor hours, you divide the actual labor cost by the rate per hour, which is given as 20 Liberian dollar. So now let's calculate actual labor hours. Working one. Working number one. Calculation of actual labor hours. In the month of January, actual labor cost given in the month of January is 25,000. And you were told labor is paid at the rate of 20 Liberian dollar per hour. If labor is paid at 20 Liberian dollar per hour and the actual labor cost incurred in January is 25,000, how many hours will have been worked before this 25,000 will be paid? 25,000 divided by 20, that gives us 1,250 hours. That is to show that to incur 25,000, 1,250 hours were worked. In the month of February, the overheads is 30,000. I mean labor cost rather. Labor cost is 20,000 Liberian dollar divided by the rate per hour. That will give us 30,000 divided by 20. That is 1,500 hours. And in the month of March, you have 20,000 divided by the rate per hour. That gives us for 20,000 divided by 20. That gives us 1,000 hours. Now, you've gotten the actual hours worked in each of the month. Another important working is the overhead absorption rate. And overhead absorption rate, I've told you, it is budgeted overheads divided by budgeted level of activities. Now, let me have that as working number 2. Calculation of overheads absorption rate. Working 2. Calculation of overhead absorption rate. Remember, overhead absorption rate equals to budgeted overheads over budgeted level of activity. And the level of activity is labor hours. So that means you have budgeted labor hours. Now that you have this as the formula, in the month of January, how much is the budgeted overheads? We have 120,000 in January, and the labor hour is 4,000. In February, 90,000, and labor hour is 4,500. In March, 150,000, and labor hour is 5,000. So now let's use those overheads and the labor hour to compute the overhead absorption rate. So in month of January now, in January, OAR, the budgeted overheads in January is 120,000 divided by budgeted labor hour. The labor hours given in January is 4,000. So 120,000 divided by 4,000, that gives us 30 Liberian dollar per hour. In February, in the month of February, overhead absorption rate equals to, you were given the overheads of 90,000 in the month of February, divided by the labor hours given in the month of February is 4,500. That will give us 90,000 divided by 4,500. That gives us 20 Liberian dollar per hour. And in the month of March, overhead absorption rate equals to, the overheads in the month of March is 150,000 divided by the labor hour is 5,000. That gives us 30 Liberian dollar per hour. Now that you have computed the overhead absorption rate, we can now use this overhead absorption rate to absorb overheads to the product. How much will now be the overheads absorbed? Overheads absorbed in the month of January, we got 1,250 labor hours. That was the actual labor hours used in the month of January. If 1,250 labor hours were used and the overhead absorption rate in the month of January is 30, therefore you have 1,250 times 30, that will give you the amount of overheads absorbed to the product in the month of January. So we have 1,250 times 30 Liberian dollar. 1,250 times 30, that gives us 37,500. That is the amount absorbed to the product in the month of January. In the month of February, the actual labor hours is 1,500 as calculated. In the month of February, we have the actual labor hours to be 1,500. And the overhead absorption rate is 20 Liberian dollar per hour. So you have 1,500 times 20. That will give us 1,500 labor hours times 20 Liberian dollar. 1,500 times 20, that gives us 30,000 Liberian dollar. In the month of March, so actual labor hour in the month of March has been calculated, and we got that to be 1,000 hours. Then overhead absorption rate in March is 30. 1,000 times 30 will give you the amount of overheads absorbed in the month of March. So we have 1,000 hours times 30 Liberian dollar. That gives us 30,000. 30,000. So if you now subtract the expenses from the revenue, then you will get the profit. Since the questions ask us to present the cost per unit, let me separate this. Let me take this as A, the revenue as A, so that we'll be able to sum up the cost, so that we can get the total cost. With the total cost, we'll be able to calculate the cost per unit. Now, total cost now. So we sum up all our costs, 62,500 plus 25,000 plus 37,500. In the month of January, the total cost amounted to 125,000. Let me have the total cost as B. Then in the month of February, how much is the total cost? 90,000 plus 30,000, that is 120,000, plus 30,000, that will be 150,000. The total cost amounted to 150,000 in the month of February. In the month of March, 50 plus 20, that is 70 plus 30, that is 100,000. The total cost amounted to 100,000 in the month of March. Now that you have determined the revenue and cost, how much will be profit? Total profit. Total profit. So the profit will be A minus B. That is your revenue minus total cost. So that will give us the total profit for each of the months. Then the revenue in the month of January is 187,500. 187,500 minus total cost of 125,000. Then we have 62,500 as the total profit in the month of January. In the month of February, revenue is 225,000 minus total cost of 150,000. Then we have the total profit of 75,000 in the month of February. In the month of March, revenue is 150,000, while the total cost is 100,000. We have the profit of 50,000. Now you've gotten the total profit. If you go by the requirement of the question, you have to present the cost and profit per unit of each batch order. You need the cost per unit and the profit per unit. Now, how much will be the cost per unit? Cost per unit, that will be total cost divided by the number of batch output. The batch output is given to be 1,250, 1,500, and 1,000. So we use it to divide the total cost. That will give you the cost per unit. And the total cost is 125,000, 125,000 divided by the output, batch output, 1,250. In the month of February, the total cost is 150,000. And the batch output is 1,500. And in the month of March, the total cost is 100,000. And the batch output is 1,000. Therefore, cost per unit, we have 125,000 divided by 1,250. That gives us 100 Liberian dollar. In the month of February, how much will be the cost per unit? 150,000 divided by 1,500. That equally gives us 100 Liberian dollar. In the month of March, we have 100,000 divided by 1,000. That gives us 100 Liberian dollar. Therefore, the cost per unit is 100 Liberian dollar. Profit per unit, that will be, the total profit is 125,000 divided by batch output of 1,250. Sorry, the total profit is 62,500. 62,500. In the month of February, the total profit is 75,000 divided by 1,500. And in the month of March, the total profit is 50,000 divided by the output, batch output 1,000. Therefore, profit per unit, 62,500 divided by 1,250, that gives us 50 Liberian dollar. 75,000 divided by 1,500, that gives us 50 Liberian dollar. 50,000 divided by 1,000, that gives us 50 Liberian dollar. Or if you don't want to calculate your profit that way, profit per unit, if you don't want to calculate it that way, remember the selling price is given to be 50 Liberian dollar. All amount is in Liberian dollar. The selling price is given in the question, and that is given to be 150 Liberian dollar. Then from this, you less cost per unit. And our cost per unit has been determined. And we got 100 Liberian dollar for each of the months. 100, 100, 100. So if you subtract the cost per unit from the selling price, you get the profit per unit. This will be 50, 50, 50. That is solution to the A part of the question. The B part of the question, you have to determine the overall position of the order of 3,000 units. B, overall position of the order of 3,000 units. So we have our workings in Liberian dollar. So you have the revenue. Remember, the selling price is 150 Liberian dollar. So revenue for 3,000, that will be 3,000 times, that is 3,000 units, times selling price of 150 Liberian dollar. That gives us 3,000 times 150. That gives us 450,000. So we have 450,000 Liberian dollar. Now from revenue, you less the total cost. Less total cost. The total cost of the 3,000 units, 3,000 units times, remember the cost per unit has been calculated, and we got that as 100 Liberian dollar. So 3,000 times 100, that will be 300,000. If you subtract 300,000 from 450,000, you have the profit of 150,000 Liberian dollar. That is the total profit. So that is the overall position of the 3,000 units. So this marked the end of the solution to the question. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ACCA.